Hey everyone, PK here. Future price growth is not determined by historical price growth, and future price growth is not determined by vacancy rates alone, and future price growth is not determined by rents. It's not a case that if like sometimes people think that this suburb has grown consistently every year by 2, 3, 5, 6, 7, 8%, therefore it will continue to grow. There are hundreds of suburbs that have done that, and then they don't grow. On the flip side, some people think that this suburb hasn't grown at all. It's actually at 2008 levels, like much of Cairns. It's not grown at all for the last 10 years, so therefore this is a really good buying opportunity, and a really good deal because it's so cheap. But once again, there's so many instances of those suburbs not doing anything for the next 2 years, 3 years, 5 years. So historical performance by itself is not a good indicator of future performance. Same with rents. If yields are high, let's say 7% or 6%, then sometimes people think, including me, I used to think this, that means that investors are going to be attracted to the area because of the yields. Investors make up 30-40% of the market on average. Therefore, demand is going to be strong and prices will grow. But once again, you can see hundreds, if not thousands, of suburbs where yields are high, but prices won't do anything. On the flip side, as well, that argument doesn't hold. And vacancy rates, of course, cash flow is a separate consideration to capital growth to some extent, but sometimes people think, look, I found a suburb on realestate.com that has low vacancy rates, 0.5%, 0.2%, 1%, whatever the case may be. Hey, it's a really tight rental market. That must mean that prices are bubbling over, are simmering away, and are going to increase. But once again, there are hundreds of suburbs where that's the case. In fact, most suburbs in places like Tassie, in places like North Adelaide, far South Adelaide, large chunks of Brisbane have vacancy rates still very low. I'm talking the housing market, freestanding houses, not apartments here. But they won't experience much growth at all in some of those suburbs that I've just mentioned, some of those areas. They won't experience much growth at all. So, the mistake that everyone's making, trust me, I'm not looking down on anyone. This was me as well, right? Just a number of years ago. Don't go on realestate.com and find, hey, which suburbs have grown, which suburbs have got low vacancy, and which suburbs have got yields of 6+, and assume that those suburbs are going to grow in value in the next year, 2, 5 years, etc. There's no correlation between those three metrics in of themselves and price growth. And equally, where does the analysis stop? Do we say that if prices haven't grown, then it's a good time to buy, and that there's more opportunity for price growth? Which school of thought is right? Consistent price growth or no price growth? Do you get where I'm going with this? So I'm just trying to educate a little bit to say that those three metrics, whilst important, are three metrics among many that we as property investors need to understand in order to estimate the balance between supply and demand. Okay, so those are very important metrics, but just by looking at historical price growth, you can't predictably say what prices will do in the future. Just by looking at vacancy rates, you can't expect that price growth will occur in the future. And just by looking at rental yields, you can't expect it. And you can't expect to estimate accurately price growth by even looking at that trio and kind of matching it up and saying, okay, well, I'm not going to look at each one of them individually. I'm going to collectively see what's going on. Those three things in of themselves are going to fall short of being able to accurately predict capital growth. So I know that that's what a lot of people do when we first start researching. This is the kind of research that we do, or most people do. But we do need to carry on. We need to add more metrics to our arsenal. There's upwards of 30 metrics. It seems daunting, but it really isn't. That you really need to analyze both the trend analysis, the moment in time, and the trade-offs between each factor, each metric, to be able to say, okay, is this suburb actually going to do well or not? No one can predict capital growth down to the percentage, but by having a robust system, you can maximize your chances of buying a high-performing suburb, a high-performing property, and minimize the risk. And at the end of the day, that's all that you can ask for. But if you're just looking at those three metrics, vacancy, yield, and historical price growth, then that you're not really maximizing the opportunity for finding a high-performing suburb, and you're not really minimizing your downside risk. Hopefully that was educational. If it was, please like this or love this, and if you agree, or if you have any thoughts, or even if you disagree, please comment below, and we can start a bit of a discussion. All right, thanks everyone. See ya.